Market does have pseudo equal lows here, so I'm giving it the benefit of the doubt. If it trades higher or gaps up and trades down into the gap and fills it, then reaches up into here, that would be the ideal scenario. That's what I'm ideally looking for on Sunday. So if we were to have a gap higher opening on Sunday, a whiplash setup would be selling the open, waiting for a gap to fill. I'm not saying that this is a price where it's open. I'm just graphically describing it to keep me on point with what I'm saying. The higher gap opening, if we sold at the opening and closed the short at the closure of the gap, that is whiplash. And then Catapult would be buying once the gap is filled and trading in the direction of the initial gap opening. Okay, so and then you would run for a liquidity pool above it or high, or closing a fair value gap above you. A bearish whiplash would be an opening lower and then buying at the opening and then waiting for a fill back up to previous day or Friday's trading. And then once that gap's closed, you would exit the position. That would be a whiplash. A catapult or bearish catapult would be then entering short and then trading in the direction of the initial gap. Okay, so in context, I would rather see it gap up. It doesn't have to be a large gap, but I'd like to see it gap up, come down, fill the gap, and then trade higher. I'd like to see that. Now, if we do gap lower, and it doesn't have to gap at all on Sunday, but if it gaps lower, I'd like to see it trade higher, fill the gap, and then make an attempt to go lower, and then trade back above the gap, and then the gap should act as support. And I taught you that before.